Federal Reserve is in some serious hot water after two of its senior officials were forced to resign over a trading scandal. President of the Fed in Dallas, Robert Kaplan, and the president of the Fed in Boston, Eric Rosengren, both announced that they would retire after making some stock market trades that seemed to only benefit their personal financial interests. Over the last year or so, the Fed has been in the news a ton lately as they've been raising and lowering interest rates and buying bonds in the stock market. But as you can see, the economy has completely changed due to the pandemic. So even though the Fed was able to make some changes and adjust some interest rates, the economy still ended up in a recession. But now the Fed is in the news for a completely different reason, because it seems like its senior officials are making some trades that are only benefiting themselves. And this has pushed a ton of people to question the Fed's role in our society and economy as a whole. So what exactly happened with the Fed during this trading scandal, and what is going to come next for the Federal Reserve? We're going to be discussing all of that and more in today's video, so make sure to stick around till the very end to learn everything you need to know about this Fed trading scandal and what might be coming next for the Fed and our economy. But before we get into all of that, do me a quick favor and smash that thumbs up button below. Hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. The Federal Reserve Bank is kind of an interesting part of the US federal government. It's not technically a part of any branches and kind of just does its own thing. It's the Federal Reserve's job to actually print the money in the United States. They also have control over the benchmark interest rates that a lot of banks use even to this day. But before the Federal Reserve, it was up to banks to kind of set these benchmarks and to use their own currency and to track it all. Back in the early 1900s, a lot of banks were having issues because they could not handle the ongoing stress of the economy. As the economy was growing, a lot more people wanted to use banks, and that meant that banks needed to supply them with more money. This also worked on the flip side too, because if banks didn't get enough business, then they would ultimately close because they did not have enough cash. And before this time, the United States government did not have a national banking system, at least not to the extent that we see today. This ultimately led to the formation of the Federal Reserve, something that can actually handle and print all of the money and supply all of the money to individual banks across the country. This meant that banks no longer had to be as independent as they were before, and now they were all interconnected across the country. And this allows the Treasury and other departments in the federal government to actually focus on the economy, growing the economy, and watching the economy without actually having to put their hands into the economy itself. For the Treasury was doing kind of all the same things that the Federal Reserve is doing now. So the Treasury would ultimately decide policy and then issue it all at the same time. This created a little bit of a problem because our federal government runs on a system of checks and balances. The Treasury was actually making systems and then enforcing those systems within its own body. This meant that anything that it decided ultimately went through. So if it needed more money to print, it would do that. Once the Federal Reserve was created, now there was a private entity that could work on the recommendations of the federal government and, more importantly, the Treasury. So for instance, if the Federal Reserve and the Treasury has a particular policy change they'd like to make, they advise the Fed on what to do, but the Fed is now a private entity, which means it doesn't actually have to do everything that the Treasury suggests. And as of today, the Federal Reserve has a ton of different roles that it plays within our economy. Like for instance, it acts as a depository for all bank reserves. This essentially means that instead of banks holding tens of millions of dollars at their individual bank, they will instead take that money and deposit it into the Federal Reserve. This is a benefit to them because if banks were robbed for whatever reason, there wouldn't be that much money actually in the bank itself. But it's still a benefit to you because if you need your money, the bank can still get it for you, and it's all backed by the federal government. Federal Reserve also does a ton of lending. So if the US government or banks abroad need money, the Federal Reserve prints money and gives it to them. Speaking of printing money, that is one of the biggest things the Federal Reserve does. It prints money, and like we saw in 2020, it printed trillions of dollars in stimulus. But here's the thing you need to know about the Federal Reserve Bank. The Federal Reserve Bank's job is to work directly with the money in the United States. It doesn't create policy around the money in the United States. That's the Treasury's job. The Treasury will actually create these plans, and it will advise the Fed on how to function from there. As of today, there is one main Federal Reserve Bank in Washington, D.C., and 12 other Federal Reserve Banks across the nation. Since the Federal Reserve Bank is a federal agency, meaning that it's national all across the country, it needs to have multiple different locations in individual economies all throughout the nation. Like I said before, this means the Fed has 12 satellite agencies, all throughout the United States and all serving those individual economies. Basically, their role is to carry out the functions of the Fed, but in those areas. Each one of those Fed agencies has its own employees and its own presidents. And it's those presidents who got into a little bit of hot water last month. In particular, two Fed presidents, one in Dallas and one in Boston, are under scrutiny lately because of some financial transactions they made back in 2020. The Fed president in Dallas, Robert Kaplan, made some massive investments in the stock market last year, particularly in Delta and Apple. These investments were well over $1 million in value. And if you remember last year, Delta Airlines and Apple went through some pretty crazy changes during the pandemic, which means their stocks reflected that. Their stocks went up and their stocks went down back in 2020. And Robert Kaplan kind of bought into all of this as well. Flip side, in Boston, Eric Rosengren did something very similar, except for he invested millions of dollars in REITs and other securities. Now, news about these tradings didn't immediately break until September of this year, when a lot of news agencies were reporting possible insider trading going on at the Federal Reserve. When the news broke, Robert Kaplan and Eric Rosengren immediately stated that all of their actions completely met the Federal Reserve's ethics guidelines. And they also stated that they would sell all of their securities and investments by September 30th and will not engage within those funds so long as they're Fed presidents. And normally a stock interaction like this one would not raise a lot of red flags. But because the Federal Reserve is an independent agency and these were presidents in their Federal Reserve, things just seemed to not add up for a lot of people. One of those people was Senator Elizabeth Warren, as she actually wrote a note to the Federal Reserve stating that they need to investigate these tradings. This actually led the Federal Reserve to conduct an investigation into these tradings, and some of the details of that investigation just came out. And not only is Robert Kaplan and Eric Rosengren listed in the investigation, there's a couple other names listed too. One of those names is Vice President of the Federal Reserve, Richard Clarida. Richard Clarida reportedly invested around $1 to $5 million in a variety of different funds back on February 27th, 2020. Now again, there's nothing illegal about investing into particular funds and moving money around in the stock market. But in this particular case, Robert Clarida moved a ton of money around right before the Federal Reserve President, Jerome Powell, made a huge policy announcement. This led a ton of people to speculate whether there was insider trading going on at the Federal Reserve. And again, because the Federal Reserve is an independent agency that works directly with our nation's money and printing money, you can see why that might be a problem. Elizabeth Warren wrote to all 12 Federal Reserve agencies all across the nation, as well as the Washington, D.C. Fed, stating that they need to institute a 60-day ban on all stock trading amongst officials. This needs to be done within the next 60 days, but as of right now, the Fed has not budged on the issue, as they're still continuing their investigation into insider trading, and it is not done yet. But even though Robert Kaplan and Eric Rosengren said that they would sell all of their securities and investments by September 30th and would not interact with those investments as long as they were Fed presidents, because of all the scrutiny and public backlash, they decided to resign from their positions. Robert Kaplan will no longer be the Fed president in Dallas by October 8th, and Eric Rosengren has already resigned as the Fed Boston president. And like I said, this investigation is still ongoing. So even though the two actually resigned from their roles, they're not out of the water yet. No official charges have been made yet, but a lot of people have been pointing out that this is a little bit of a sketchy situation for the Fed. The Fed functions as an independent agency. So trading money like this and having information about the economy and then using it to make stock market trades for personal gain might not be something you want to be associated with. And it's led a lot of people to speculate whether the Federal Reserve can handle itself independently or if it needs to be under another government branch like the Treasury. But now I want to hear from you on this issue. Do you think that there was insider trading going on at the Federal Reserve? Or do you think this was just all a coincidence and all of the trades were completely legal and ethical? In addition, do you think that the Federal Reserve is still okay acting independently, or should it be under a particular branch of the government like the Treasury? Whatever your thoughts are on the issue, leave a comment below before you go. Money Minds, that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button before you go. Keep hustling, and I'll see you all in the next one.